What's up guys, Raymond here with another video. I'm going to be doing a stock market analysis. This is a daily thing that we do on Mondays to Fridays, and Saturdays and Sundays is purely going to be cryptocurrency, but I'm still in the works of, I'm still planning that aspect of the enterprise. I haven't actually completed it yet, but once I've got a plan and an implementable plan, then I'll start implementing the plan. But as of now, it'll just be stock market analysis, where we analyze the losers and gainers. We mainly focus on the losers because I feel as though if a stock market has lost a lot of value, so the specific losers we look at are the top losers, so the stocks that have lost the most value in that particular trading day. So the reason why I focus on those stocks is because if you manage to find a large cap stock that's a reputable company that has lost a lot of value, happen to have lost a lot of value in one particular trading day, then that might be an opportunity to capitalize on for a good investment. So without further ado, let's get into today's top losers. Actually, I'm going to do something different. I'm going to quickly check the top gainers, because this is less likely to find a good investment here, because the stock has gained value, so it's less likely we'll find a good stock here. So let's just quickly check to see if there's any large cap stocks. That way you'll make it more efficient. So let's just check. So large cap, I would say, is minimum 1 billion, £1 billion or dollars or whichever currency that's relevant. So let's just quickly check. We can't see any as of now, so these are just short positions. So yeah, so we don't need to, let's just got that out of the way. So let's just get rid of forget about the winners. Let's go to the losers. We're doing the same. We have the same approach. If we can't find any stocks that are of £1 billion or whichever denominated currency valuation, we can look into smaller stocks. But the smaller the stock, especially under 1 billion, the riskier the stock is, because it's usually the case that larger stocks, especially over 1 billion of denominated currency in value, have been around for longer and have established themselves more firmly in whichever sector they're in. That's why their size is so large. So, and they usually have a more of a durable competitive advantage, which is then again your strongest tool against risk. So let's just quickly check. 227 million as a market cap of that. This one, we're going to avoid the short positions and long and the multiples of long positions, because those ones aren't exactly stocks themselves. So far we haven't seen anything. So there's only 3 stocks. So River Mercantile, Mercantile, Rapid Nutrition, CPP Group. That's it. And we're doing it at pretty late. We're doing it at, we're not doing it at the best time. We're not doing this video at the best time, I would say, but we're doing it at a decent time, because the US stock market is open. It's been open for about 5 hours. So we're pretty much in the middle of the trading day, but we are excluding European stocks, which is not the best. So I'll probably arrange the videos in the future for a time where both markets are open. So probably around 3 p.m, 4 p.m, just before the European markets close, Greenwich Mean Time. So yeah, let's just so we haven't found any billion pound valuated companies. So let's just quickly check if we can see any value in the ones that are lower value. So you can see the profit margin for River Mercantile is not too bad. Let's just quickly check what they sell and how they make their money. So brief summary. So client focused asset management. So it's an asset management company, deals with government funds. So it's a financial services company, basically. Let's just quickly check the PE ratio. 26 is not too bad. Dividend yield just under 5, which is good. Usually you don't dividend paying companies are getting more and more rare, especially with larger cap companies. So PE ratio is good. The earnings per share is 10 pence per share, which is not great at all. Debt to asset ratio is not bad, actually, 28%, which is really, I love low debt to asset ratio companies. Profit margin is 11%, which is really, really good, actually, and it's been consistent the past 3 years, so it's not bad. Let's just quickly check the net change in cash for the past 3 years. 5.3 million, 200k, and and 17K. So the earnings, the net change of cash growth over the past 3 years, that's pretty good. Probably the next year you can kind of predict that it'll probably be larger than this past year, especially considering. Actually, let me ignore that. So the company is decreased by 77% today. I'm trying to figure out why. Let's just quickly check if there's any news related to the company, and then we can see if it's a viable opportunity to explore. So River and Mercantile River and sorry, it's really weird. River and Mercantile. Okay, cool. So news. Use precision location always. Okay, that's fine. So let's go to news. River Mercantile appoints him as head of equities. River Mercantile names James Sim as head of equities. What? Okay, cool. Alright, so they've changed the head of equities. FT approves as a takeover. Okay, so Sim prompted to head of equities. River Mercantile, River Mercantile to return Jewish shareholders via B shares. Okay. Premier stutters with 400 million River Mercantile to lose 200. Why is that? I see Coast Strikes deal to buy River Mercantile. Okay. Alright, so there's two quite significant pieces of news that might be the cause of the stock market, the market value decreasing so much. So they're being taken over by a company called AssetCo. Let's just see why. Okay, AssetCo reaches a deal to buy River Mercantile Group. For 19 million, which is weird. Okay, let's quickly check the actual value, and especially the debt to asset ratio. The balance sheet suggests that the total assets is 83 million. The total liabilities is 23 million. So minus that, that's about 60 million in company value. So the company is valued at purely assets about 60 million. So the company is being bought out for 98.8 million as long as certain conditions are met. These conditions include the completion of the solution sale to Schroders and the return of 190 million to RMG shareholders. So I'm trying to figure out how they're going to pay 190 million, which is strange. Okay, cool. The company is worth about 60 million or 8. The company is worth about 60 million, but the company decreased its value by over 50%. So it would have been over 120 million, but yeah. So I'm trying to figure out how they're going to return that money. It's probably going to have to be payments over time. Update says the deal will be implemented by way of court sanctioning scheme arrangement. So the company's been sanctioned, strange. Although the AssetCo will be able to affect the acquisition by the way of an offer, this offer would then be subject to consent of the panel, and the terms of the cooperation agreement scheme is expected to become effective during the second quarter of 2022 following completion of the deal. Shareholders would own approximately 41% of the combined group. AssetCo, Martin, the asset wealth management industry content. We're committed to building an agile safety. I look forward to the deal. Alright, so the company, it looks like the company will survive, but they're being sanctioned for some reason. Let's look at the other major reason. I'm going to try and end this video because I don't want it to be long and I don't want to bore you guys. So the first reason is that it's been sanctioned, and let's quickly check the other reason. Okay, River and Mercantile. I'm really rubbish at typing, sorry. River and Mercantile. Alright, cool. So news. The head of equities has been changed and the company's been taken over. Also, the last piece of significant news is that it has to return that money. So 190 million to shareholders. That's pretty much it. It's 2 in 1. So the company's been taken over. I think because it owes that much money to shareholders for whatever reasons, it's been sanctioned for some reason. But the company will survive because it's being taken over. Well, there's a high chance it's going to be taken over by AssetCo, as long as certain conditions are met. So is this company good in a viable way? I would say I would say it's a viable investment. Viable investment, considering that the conditions are met, that it will be taken over. Also, I think we need to do more of an in-depth analysis into why the company's value has decreased so much. Like for example, the two reasons in the news: the company is going to return 190 million pounds worth of value to shareholders. We need to look at the implications of uh, that scenario on the share price, and the just generally the future, for the future prospects of the company. But that shouldn't take too long. But in this video, I just wanted to just give you guys an outline of the process I look at, the process I use to analyze on whether or not a company is a viable investment. Um, I know it's never a perfect outcome or perfect decision, but it's just a general idea of it's just a general analysis, and I use that framework to guide my actions with regards to buying companies, buying shares in companies. I usually with companies like this that I'm not too sure about, or I'm very insecure about the decision as to whether or not it's a good decision, a good investment. I usually put lower my stake or lower my investment, lower my cash investment to a minimal amount. So probably for this one, I'll probably invest maybe around £100. Um, I'm not going to do it now because now is not the best time, but probably about £100. As opposed to if it were a large cap company that didn't have so many issues, it'd probably be a lot larger. So thank you guys for watching, and I'll see you in the next one.